I think we should start from what is liquidity, right? What is liquidity? Money. Simple and short. Liquidity, money. Because it is money that moves the market. As an analyst who is trading money for a billionaire, let's say you are the chief portfolio manager of a hedge fund. Because I think as a trader, you should also know the operational module of people who are actually doing things that are moving this market. I, for one, I started taking CFA classes. You know what CFA classes? Chartered Financial Analyst. I started taking CFA classes because I really wanted to know how this market works. Because I know that the money in your trading account and my trading account is not moving this market, right? We are trading most times with brokerage account, which brokerage are usually CFD brokers. So you know to know the people whose money actually moving this market. That's where you start the definition of liquidity from. So who are they? Fund manager, investment banks, big institutions, typically central banks, big banks. You understand? So these are the kind of people that have money that are directly influencing the liquidity pool. So when we say liquidity, we simply mean areas on the chart where this kind of institutions would most likely want to take an action. That's simple. And where are those kind of places on the chart? Very simple, not to complicate things, support and resistance level. Not to make it complicated, not to speak any big English. Above every resistance or above any prominent major support and resistance levels, below or above are usually liquidity blocks. Levels where these guys will most likely want to take an action from. Do you get what I'm trying to say? So, in this case now, if I want to look for where the liquidity is, now, it's very simple. Let me make it very obvious with a line chart. In this case now, I know very well that if I want to enter this market and I want to get the best possible premium price to buy or sell from, I'll look for an area where there will most likely be more players in the market. For instance, I want to sell. I need as many buyers as possible for me to sell to. Remember that this is a business transaction that they are doing, not in your CFD broker. Remove your mind from buying and selling on your phone. I need to say it because you need to think like that, because it's until you begin to think like that that you leave the 90% behind. You need to think like this. So we are not saying people that, when I mean that the market is looking for buyers to sell to, in this case, I'm not talking about you people here. I'm not talking about you. I'm talking about real retail traders whose money are in the liquidity. So most likely they will be more interested in taking an option or taking a trade here. Those that entered for, let's say they entered a sell here, most likely they will put their stop losses above this level. So this is the price of interest. So anytime the market gets to around this level, there is high level of interest. It is that interest that is the liquidity. Because you want to take an action here, he also wants to take an action here. The people that already entered a sell here, their stop loss is here. You understand? The people that want to go for a breakout, where's their buy stop order? Here, the same place. You understand? So this is a zone of interest. That's where the liquidity is. So when you're looking for liquidity on the chart, you're looking for the zone of interest. Interest of the reasonable and the most people whose money are moving the market, which are levels like this one. These ones now are minor ones. These ones, if they're looking for a premium price, they want to look for the one that is most obvious as obvious can be. Another thing they also use is moving average. If you listen to guys talk on big analysts talk on Bloomberg, they talk a lot of moving average. Even on your chart, if you look at your news, the news on your MetaTrader 4, you see it's above 200 MA, 200 MA. That's why I pity people who say indicators don't work. Indicators are rubbish. You don't know what you're saying. You are saying rubbish. The indicators don't work. I realize indicators, you are just saying, you don't know how to use it. That's why. So don't make your ignorance look as if it's a general thing. It's only you that's ignorant. So indicators really work if you know how to use them, especially an indicator like moving average. Very, very powerful indicator. The guy I told you guys that taught my brother's friend how to trade, that works in a bank, guess the strategy he's using. You know this indicator called alligator. Alligator, that is a combination of 3 moving averages. That's what the guy uses to trade for a bank. So when somebody tells you that indicators don't work, don't forget, they don't know it. They are just ignorant. They don't know how to use it, or maybe they want to sell a cost to you. Yeah, so it really works. So that's liquidity. Does it make sense now?
Join our copy trading system. Copy trades automatically from our professional fund managers and sophisticated expert algorithm. Make up to 5% monthly. Terms and conditions apply. Registration is ongoing. Start copying now.